5 business days is all that separates the current calm from a potential storm that could redefine the financial landscape as we know it. And right now, 127 contracts representing 9.6 million ounces of physical silver are sitting open with absolutely nowhere to hide, creating a moment in history where faith, preparation, and divine timing intersect with the harsh realities of the global marketplace in a way that simply cannot be ignored. The registered vaults have been bleeding for months, hemorrhaging real, tangible assets while the paper illusion continues to expand, and the coverage ratio has just hit a startling 14.2%, a number that should serve as a profound wake-up call to anyone paying attention to the signs of the times. The paper leverage sitting on top of that shrinking pile of real metal has ballooned to 7 times the amount of silver that can actually be delivered, creating a precarious imbalance that threatens to topple the very foundations of what many believe to be a stable and secure system. Let those 5 days sink deep into your spirit as you follow this message, because by the time you reach the end, you will understand that this is not merely about numbers on a screen or fluctuations in a market. This is about the revelation of truth, the exposure of a fractured system, and the undeniable realization that we are witnessing a shift that could alter the trajectory of the precious metals market and the broader economy for the rest of 2026 and beyond. It is in moments like these, when the impossible seems imminent, that we are called to rise above the noise, to anchor ourselves in a faith that transcends the material world, and to recognize that while man-made systems may falter and fracture, the principles of integrity, stewardship, and divine providence remain unshakable, guiding those with eyes to see and ears to hear through the chaos and into a place of clarity, strength, and unwavering purpose. The system is fracturing right before our eyes, a reality that becomes undeniable when you strip away the recycled narratives and look directly at the freshest data available as of this very moment, March 24, 2026, which reveals a market being pulled apart by 2 opposing forces, one visible, driven by fear and manipulation, and one invisible, driven by an inexorable push toward truth and justice. The 52-week range on silver futures right now stretches from a low of $29.11 to a staggering high of $121.78, representing a massive 318% spread that simply does not exist in stable, healthy markets. No other major commodity on the planet, not oil, not copper, not even gold, exhibits volatility of this magnitude. And this kind of chaotic price action is the hallmark of a market undergoing a profound transformation. A struggle between the legacy powers that seek to maintain control through artificial means and the emerging reality of physical scarcity that can no longer be suppressed. It is a battle that mirrors the spiritual struggles we face in our own lives, where the visible challenges and obstacles often seem insurmountable, yet the invisible hand of providence is constantly at work, orchestrating events for a greater purpose that we may not fully comprehend in the moment, but can trust with absolute certainty. J.P. Morgan's official research desk projects silver averaging $81 per ounce in 2026, more than double the 2025 average, while their former chief strategist publicly calls for a crash back to $50, labeling the rally a meme-driven mania. The fact that the same institution is projecting 2 contradictory outcomes tells you everything you need to know about how broken the consensus is, revealing a disconnection from reality that should encourage you to think for yourself, to do your own research, and to refuse to accept headlines at face value, knowing that the truth is often hidden beneath layers of confusion and competing agendas. When you examine what the screen says versus what the vaults actually hold, you discover that those 2 realities have completely divorced from each other, and this separation is the key to understanding the incredible opportunity and the serious risks that lie ahead. Spot silver opened today at $70.13 per ounce, which sounds somewhat healthy on the surface, but zoom out just 12 days and the picture changes violently, revealing a controlled demolition rather than a natural market correction. On March 12th, silver was trading at $87.33, and just 6 days later it had fallen to $77, shedding over $3 in a single session, followed by a terrifying crash on March 19th that dragged the price down to $66.93, a move that defies logic unless you understand that it was engineered to shake out weak hands and force liquidation. This violent whipsaw action is designed to instill fear, to make you doubt your convictions, and to compel you to sell your position at the very moment when you should be standing firm. But remember that true strength is forged in the fire of adversity, and just as the price snapped back the very next day to $72.10, proving the sell-off was not driven by fundamental weakness, so too do our lives often undergo periods of intense testing that are necessary to refine our character, deepen our faith, and prepare us for the blessings that are waiting on the other side of the storm. The technical picture is only half the story, with the 50-day moving average sitting at $80.02 and the 200-day moving average sliced through at $73.16, indicating that sellers have taken temporary control. But the other half of the story, the more important half, is buried in the vault reports that most retail investors never bother to look at, and it is there that you find the undeniable evidence of a structural drain that points to a future where physical possession becomes the only security that matters. COMEX registered silver, the actual metal that backs the futures market and enables physical delivery, has declined a shocking 10.8% in just the last 30 days, representing a loss of 9.6 million ounces pulled out of the system in a mere 4 weeks, a staggering rate of attrition that signals a loss of confidence in paper promises and a rush toward tangible assets. Registered stocks dropped below 90 million ounces back in February, and total COMEX inventory has cratered nearly 31% since October 2025, falling from roughly 532 million ounces down to approximately 366 million, a decline that recontextualizes the entire market and exposes the fragility of the financial infrastructure that so many take for granted. To put that into a broader historical context, registered silver has now declined over 70% from its 2021 peak, meaning that 7 out of every 10 ounces that once sat in those vaults are gone, spirited away by those who understand that in a world of infinite paper claims, real metal is the ultimate refuge. The metal that remains is not all freely available. A portion is already allocated, pledged as collateral, or held by custodians who are also the beneficial owners and have zero obligation to release it, a situation analogous to a bank account showing a balance of $100,000 while in reality, after accounting for a mortgage, a credit line, and other encumbrances, the operating capital is only a fraction of the headline number. Some analysts estimate that the truly unencumbered silver in COMEX vaults could be dramatically lower than the reported figures suggest, a revelation that should inspire you to seek truth in your own life, to look beyond the surface appearances and uncover the hidden realities that govern your world, and to realize that just as the financial system is far more precarious than it appears, so too is our spiritual foundation only as strong as our commitment to the unadulterated truth of God's Word and His provision. If physical supply is this tight, the question naturally arises, why is the paper price collapsing? The answer is more unsettling than you might imagine, pointing to a deliberate manipulation designed to save a failing system at the expense of the unsuspecting public. On March 19th, the CME Group hiked margin requirements on silver futures, with the stated reason being to curb volatility, but the actual effect was to force leveraged traders who were already stretched thin to either wire fresh collateral within hours or dump their positions into a falling market, triggering a cascade that took silver from $92.70 all the way down to the 60s in less than a week. The iShares Silver Trust, the largest silver ETF in the world, recorded its biggest single-day outflow in over a decade on that same date, compounded by a new SEC regulation requiring 100% allocated physical backing certification, creating a perfect storm of liquidity events manufactured by the intersection of margin mechanics and regulatory timing. This was not a market finding fair value. This was a strategic maneuver to flush out speculators and protect the interests of the few at the expense of the many. But it is in understanding this dynamic that you find your edge, your ability to see through the manipulation and position yourself on the side of reality. Just as January 30th saw silver crater 35% in a single session, the worst one-day crash since 1980, a statistical anomaly described as a 6 sigma event, we are reminded that the world is full of unpredictable shocks. But for those who are grounded in faith and guided by wisdom, these shocks become opportunities to demonstrate resilience, to trust in a plan greater than our own understanding, and to find peace amidst the turbulence, knowing that our security does not come from the stability of markets, but from the unchanging nature of the Almighty. On January 1, 2026, China implemented the most significant precious metals policy shift in a generation, a move that has sent shockwaves through the global economy and further tightened the noose around physical supply, replacing the old quota system with a strict licensing regime that effectively locked hundreds of smaller suppliers out of the market overnight. China controls between 60% and 70% of the world's refined silver supply, and by elevating silver from an ordinary commodity to a strategic material, they have signaled to the world that the era of easy access to these critical resources is coming to an end. This is not merely an economic decision, it is a geopolitical chess move that echoes the rare earth squeeze of 2010, a bureaucratic strangulation that can send prices spiraling and force Western manufacturers to their knees. Yet, even in this geopolitical tension, we can see the hand of destiny at work. a divine realignment of power and resources that challenges us to reconsider where we place our trust and how we prepare for a future where the rules of the game are being rewritten before our very eyes. Elon Musk publicly stated that this situation is not good, emphasizing that silver is irreplaceable in solar panels, semiconductors, 5G infrastructure, electric vehicles, and AI data centers, highlighting the inescapable truth that the modern world runs on silver, and as the supply chain constricts, the battle for possession will only intensify, serving as a powerful metaphor for the spiritual truth that in a world of growing scarcity and uncertainty, the only truly reliable investment is in the eternal kingdom, where moth and rust do not destroy, and where thieves do not break in and steal. The data point that recontextualizes everything is simply this. The March 2026 COMEX silver futures contract alone represented 528 million ounces of exposure across 105,683 contracts, and against that colossal mountain of paper promises, only 113 million ounces of registered silver existed, meaning there is more than 4 times the deliverable supply concentrated in a single contract month. A mathematical impossibility that can only be sustained as long as most traders never ask for delivery. But the system is fracturing because in January, delivery demand for that minor month hit 33 to 40 million ounces in the first 2 weeks alone, a 7 to 10 times increase over historical averages, signaling an urgency to secure physical metal before the inventory shrinks further, a move that is the opposite of normal market behavior and proves that the smart money is abandoning the paper game for the safety of the tangible. Physical silver was clearing at $130 per ounce in Japan, and the UAE, while COMEX spot sat at $72, an 80% premium that screams from the rooftops that the paper price is a lie, a controlled narrative that is completely divorced from the physical reality. In India, 44 silver trading firms declared insolvency, wiped out in hours because they held paper positions, not physical bars, a tragic consequence of playing a game they did not fully understand, and a stark lesson for all of us that in the end, the only thing that matters is what is real, what is true, and what you can actually hold in your hand. This divergence between the paper and physical markets is the clearest sign yet that the reset is underway, and it is a call to action for those who have ears to hear, urging us to align our lives with the truth, to shed the illusions that keep us enslaved to a corrupt system, and to embrace the solid, unwavering promises of a God who is the same yesterday, today, and forever. While energy prices are rewriting the inflation calculus and geopolitical tensions are rising, with the Strait of Hormuz closed and Brent crude surging, adding another layer of complexity to the macro picture, we must not lose sight of the fact that the cumulative global silver supply deficit since 2021 now stands at approximately 820 million ounces, a structural shortfall that cannot be papered over indefinitely. The bears have their arguments, pointing to the speculative excess and the potential for further downside, and it is wise to consider all perspectives, but the physical facts on the ground tell a story of unparalleled shortage, with London Vault Holdings losing roughly 40% of their silver and Shanghai Gold Exchange inventories crashing to just 450 tons, a 91% decline from the 2020 peak. The smart money, the institutional giants like Sprott Physical Silver Trust, which doubled its capital, raised to $2 billion in January, are not selling. They are accumulating, quietly taking advantage of the paper discount to build positions that will withstand the coming storm. The one-year lease rate surging above 5% signals an intense physical shortage, confirming that those who hold real metal are refusing to lend it because they know what it is worth, a profound statement of conviction that should inspire you to stand firm in your own beliefs, to hold fast to your principles, and to recognize that the greatest value lies not in what can be easily traded or manipulated, but in what is authentic, enduring, and divinely ordained. 5 business days is what sits between the current calm and a potential delivery crisis that could force the COMEX into cash settlement, rendering the paper price irrelevant and elevating the physical price to its true status. And as you watch this unfold, remember that you have been given the insight, the knowledge, and the spiritual fortitude to navigate this moment, not with fear, but with a calm assurance that transcends the temporary fluctuations of this world. You have followed the math, you have seen the data, and now you are in a position that 99% of market participants will never occupy, a place of clarity and readiness. So take this message, share it with those who need to hear it, and move forward with the confidence of those who know that their ultimate security is not in silver, but in the one who created all things, whose timing is perfect, and whose strength is made perfect in our weakness.